Welcome to Spiedel's California Minute. I'm your host, Catherine Sedan. This week we're covering the FTB's recent legal ruling clarifying when a discretionary trust beneficiary becomes non-contingent. To stay up to date with California tax law changes, subscribe to Spiedel's California Tax Letter. This monthly newsletter is written by California tax pros for California tax pros with helpful examples and charts. For subscription information, go to spiedel.com and click Publications. New FTB Legal Ruling 2026-01 answers a question that has long created confusion when preparing California trust returns. For years, practitioners have struggled with the question of when a beneficiary of a trust becomes a non-contingent beneficiary for purposes of California's taxation of trust income under RNTC Section 17742. Legal Ruling 2026-01 confirms that when a trustee has sole and absolute discretion over distributions, a beneficiary remains contingent until the trustee exercises that discretion and decides to make a distribution. At that point, and only for the amount being distributed, the beneficiary has a vested non-contingent interest. California taxes accumulated trust income based partly on the residency of non-contingent beneficiaries. Contingent beneficiaries are ignored when calculating the beneficiary allocation on Schedule G of Form 541. Although that rule has existed for many years, practitioners have often questioned how it applies when the trustee has complete discretion over whether to make distributions. Legal Ruling 2026-01 removes much of that uncertainty by providing an official FTB position that practitioners can now cite when supporting the treatment of discretionary trusts on California fiduciary returns. The ruling analyzes three common situations involving discretionary trusts: a discretionary distribution of current income, a beneficiary who merely has the potential to receive current income, and discretionary distributions of corpus, including capital gains. Each of the three different factual situations turns on the same principle. A beneficiary remains contingent until the trustee exercises discretion and decides to make a distribution. As long as the trustee has not exercised discretion, the beneficiary's interest remains contingent because the trustee's decision is a condition precedent to receiving trust property. Once the trustee authorizes a specific distribution, the beneficiary acquires a vested non-contingent interest, but only with respect to the distributed amount. Maybe most importantly, the ruling makes clear that one discretionary distribution does not permanently change a beneficiary's status. The beneficiary continues to have a contingent interest in all undistributed income and corpus. Here are some important reminders for preparing trust returns. Review the trust document carefully. The ruling assumes that the trustee has complete, unfettered discretion. If distributions are limited by an ascertainable standard or another restriction, the analysis may differ. Be careful when completing Schedule G. Resident beneficiaries should not automatically be included in the beneficiary allocation. Only resident beneficiaries with non-contingent interests are counted. Do not assume your tax software gets this right. Review Schedule G carefully to ensure only non-contingent beneficiaries are included in the allocation ratio. Monitor discretionary distributions throughout the year. A beneficiary's status changes only when the trustee authorizes a distribution, making the timing of trustee decisions important for both trust and beneficiary reporting. Legal Ruling 2026-01 does not change California law. Instead, it confirms the FTB's interpretation of existing authority and gives practitioners a clear administrative position to rely upon when analyzing discretionary trusts. For practitioners who regularly prepare California fiduciary returns, the ruling provides welcome clarity in an area that has frequently been misunderstood. Spiedel's federal and California tax update will get you updated on everything that happened during the year, and there are live webinar and in-person seminar options available. Go to spiedel.com for details. That's all for this week. Join us next time for another episode of Spiedel's California Minute.